The markets have been absolutely obsessed with SoFi Technologies, and for good reason. The stock is up over 120% this year, and it has been just absolutely flying in the past 6 months. This thing is really special, and the way this company has grown and pivoted itself from what seemed like maybe was a failed new age fintech into what could be the backbone for fintechs in the United States has really revolutionized people's opinions on this stock and, of course, the outcomes for investors. Now, in today's video, I want to compare one of my favorite Canadian companies to SoFi and tell you why I think that with just a couple little changes, EQ Bank, the stock we're talking about today, could become just like SoFi, and we could see some of the exact same results for investors here in Canada. Welcome to Golden Arch Investing. My name is Liam, and on this channel, we love to talk about investing in Canada. And today's company is really one of these special Canadian companies because what they're doing is taking the new technological age and all of the sorts of things that my generation and the generation younger than me really appreciate about the internet: the convenience, the hassle-free nature, the speed, and using it for banking. EQB is Canada's digital-first bank, and they've really done an excellent job of grabbing the attention of specific groups, specific demographics, younger people, people in the cities who just really want the access to these really high-quality bank accounts and to really convenient online first banking. So what I'm going to do in this video is I'm going to break down the SOFI playbook, which is just a couple elements that I've seen that SoFi's done that has brought them so much success. And then I'm going to tell you how EQB could do the same kinds of things in their context in Canada and see some amazing results. The first and most obvious part of SoFi's playbook is the digital first banking model. Like I mentioned with EQB, digital first banking is incredibly convenient for groups like my generation, people younger than me, people who are on the move constantly, people who live in the city and don't, drive out to these old school bank branches, right? Digital first banking really is attractive to those people. And think about the way that money has become more and more a digital concept as time has gone on. I mean, most transactions nowadays aren't actually done with paper money. Instead, it's done using credit cards, debit cards, even cryptocurrencies. Digital first banking just makes a lot of sense and happens to be growing much faster than the overall sector. The second thing SoFi does really well is this member-focused customer approach. And they call their customers members. And really their idea is they want these people to be part of a club. And then once you're part of the SoFi club, you're a member, then they're going to offer you all these other things that you might be interested in. So let's say you got a bank account with them or a loan with them. Well, hey, maybe they can offer you a credit card. Or maybe they could even offer you another product, a line of credit or something along those lines. And because this is a digital first company, they're able to find what things you're interested in based on the banking you already do with them. Now, their really strong approach to this, the really good cross-selling, has led to 75% membership growth over the last year. And I think they're sitting at about 9.5 million members. Really impressive. The third really interesting thing with SoFi is their revenue diversification. And this is where these guys have absolutely excelled over the last year. Incredibly impressive. And the thing that we really need to talk about is something they call Galileo, which is their sort of financial services technology platform. And what it is basically an API, but also a whole bunch of other products that they've packaged for other businesses. And they've managed to draw all of these customers from these other businesses because they're able to give those businesses the ability to use SoFi-like services for their fintech or for their company. And businesses have loved this. This has increased dramatically and is the #1 driver for their growth right now, which also has led to their valuation looking a lot more like a software company selling software B2B versus a bank. The last really interesting thing about SoFi is their target focus. They've really gone after what they call the Henry, which is high earning, not rich yet. Basically, it's young people with good jobs who have the potential to become wealthy in the future. They're earning lots of money, but they don't already have a huge amount in the bank, and they probably don't already have a really entrenched relationship with a legacy bank. These people are the ideal demographic for a digital bank because they're probably younger. They're probably not much older than myself, And if they are, they're probably also looking for the best deal out there and looking for someone who will offer them the kinds of products and services they might want going forwards. Maybe they're interested in investing. Maybe they're interested in mortgages. They want to buy a house. Maybe they want to get a home equity line of credit. They want to use that house to buy other things, right? So there's all sorts of awesome opportunities there. But the thing is that these people are earning lots of money. And so their wealth is going to grow, meaning their business they do with a bank like SOFI is likely also going to grow. Really an awesome demographic to be going after. So now that we've kind of outlined the SOFI playbook, and now you understand what exactly they've done and the things that I see that have made them so successful, let's talk about EQ Bank. Let's talk about the Canadian counterpart, because I think there's a lot of parallels here that are going to allow EQ Bank to do a couple little things and mirror the same results as SOFI. Now, obviously, step one, digital first focus. EQ Bank is Canada's digital first bank. That is their number one selling point to most people. And so obviously they already checked that box. They followed or even pioneered in their own way the same kind of playbook, and they've been incredibly successful at it. They are arguably the best bank for a lot of different people in Canada because they offer all these services. They cut dramatically down their overhead by not having bank branches, and they can give better interest rates, for example. They have things like their Notion bank account, all sorts of things that Canadians love. The second thing here is their similar customer growth strategy. Now, I don't know that EQ Bank's strategy is exactly the same. I know for a fact they don't call them members. They don't have exactly the same mindset about what exactly they can get from their customers. But what they do have is the ability to gather huge amounts of data from their customers and serve them with things they want. As EQ Bank has expanded its product offering, it's been doing exactly that. And as it continues to grow from its 500-ish thousand today into the millions in the next 5 years, they're going to be able to offer so many more tailored products that are going to fit exactly what customers want. Now, that's a great way for them to continue to expand on their existing customer base. They're just doing more business with the same people that already love the product. Now, again, point 3, revenue diversification. This is the bit that had me thinking, oh my God, I want to talk about this, because one of the things EQ Bank has done is position themselves as the champion for something called open banking in Canada, which essentially would allow users to have one product with one company, one product with another company, one product with another company, one product with another company, and them all to work together. For example, if I had my checkings account with RBC and my savings account with TD, I could just transfer them as if they were the same place. Or I could then use both of those accounts and grab a credit card with BMO or a Notion account with EQB or whatever I might want. Now, this possible future would allow a fintech revolution in Canada, because no longer would we be inside the walled garden environments in which our banks keep us, but instead we would have access to financial products from all these different fintech startups that would be able to access huge amounts of money that, as of right now, are kept with people who want to keep them with their bank. Am I saying open banking is happening anytime in my immediate future? No, I'm not saying that's happening. Actually, Canadians are almost notorious for our regulations around the banking system. Our government is like walled garden protecting the banking system. But EQ Bank is already in the door of the big traditional banking system. And while they might not be a big six bank in the same way that National has now become, they do have some really interesting partnerships that they've been able to build with other fintech startups. And in these areas, they've been really successful so far. And I think that this is where EQ Bank needs to focus. In the same way that SOFI was able to build out their API and build out their financial technology service, EQ Bank would be able to build out their own financial technology service. They already have some of the very best products in Canada that are already digital and that have all sorts of amazing data behind it. Now, if they knew that these certain elements are required by other fintechs in order to offer good services, it wouldn't be that out there to think that EQ Bank could be selling these same products to other companies in a very similar B2B software style business that SOFI does. And I think if there's one thing that EQ could really do to make their stock perform the way SOFI has, and we see another huge rally, it would be this. It would be them pushing themselves and and getting into that world of being a provider to other fintechs. Who knows what the next big thing is? But if EQ can be the ones who are selling the service to whoever is new on the block, including maybe cryptocurrencies, right? These crypto exchanges, then I could see them absolutely ballooning in the not so distant future. Now, the fourth thing I'm going to talk about with EQ Bank is actually going to be a little different. Now, we talked about the market or the targeting of SOFI. EQ does do that as well, but I don't think that's the thing that EQ has to worry too much about that they could grab from SOFI. Instead, I think the thing they should be worried about or thinking about is their market position. EQ is currently sitting, let's say, number 7 in Canada in the world of banks, which means there's only 6 players in front of them. And so if they want to challenge for, number 6, number whatever, then their real move should be to see how much business they can consolidate outside of the big 6. And of course, to continue pushing for their open banking revolution. I think it's not unreasonable that if regulations were made such that EQ could offer services to anyone, including to all these fintechs that now have access to the money that is held at places like RBC and TD that have hundreds of billions of assets under management, if not trillions, in Canada specifically, they would 10x. Even if they were just pushed to the same kind of multiple as SOFI. And I'm not even saying they earn a single penny more, but if they did a couple key things and the market looked at them and said, okay, we're going to treat these guys the same way we treat SOFI, we would see the stock go up 13x. They're sitting around a 10p, SOFI is sitting around 130. That is absolutely game changing. That would mean an investment into EQ Bank right now would be worth 13 times what you put in. $1,000, 13,000. 100,000, 1.3 million. Now, is that necessarily going to happen? No. That doesn't mean that the management at EQ couldn't see SOFI is doing super well, couldn't see how SOFI is messaging it, see how SOFI is branding themselves, and be like, hey, why can't we do that? We have just as much talent. We have just as much leadership in this digital banking space. There's nothing stopping EQ from doing a couple of key things and pushing themselves as saying, hey, actually our software, our technology is one of our really key factors and other banks should respect it. Before I wrap up today, I do want to point out SOFI and EQ Bank are not exactly the same. But considering the success SOFI's had in the US over the last year, I really do think EQ Bank can do a lot of the very same things here in Canada. And I personally have put my money on the table. It is publicly available in my large fund. I have owned shares of EQ Bank for a while, and I plan on buying more. I also think that EQ Bank is a great dividend stock right now. It has been growing at a steady rate for years. It doesn't have the same kind of risky nature that a SOFI did before 6 months ago, where it wasn't certain if they were going to be able to turn things around, and their bank section, right, the loan book of SOFI wasn't looking as great. Well, now SOFI looks amazing. And while EQ Bank looks strong now, just imagine if they could add some of those same revenues, some of that same revenue growth that SOFI could, it would be fantastic. That's about all I have for you guys today. If you enjoyed this video, you made it this far, please leave a like on the video, subscribe to the channel. It means a lot to me and doesn't cost anything. If you're interested in this kind of thing, we're doing videos all through the month of December here, talking about all sorts of different Canadian companies, ETFs, the economy. So follow along, hit the notification bell, and see what comes up next.